Welcome to the Coastal Lowcountry Real Estate Channel. Well, if you've recently uttered the words, let's move to Savannah, Hilton Head, or Bluffton, congratulations. Today we're going to take a look at what our current lowcountry market looks like. And if you're finally ready to pull the trigger and buy your next home, you'll be pleased to know that buyers are in a better position today than they have been in the last several years. Today we'll take a look back over the last several years to try to gain some perspective after living through what has been a crazy time in the real estate world, as we get a feel for what it might be like going forward. So stay tuned as we look at the lowcountry real estate market, past, present, and future. Welcome to the Georgia, South Carolina Lowcountry. We are Keith and Donna Hellman, hosts of the Coastal Lowcountry Real Estate Channel and local realtors with Keller Williams. Do you want to know everything there is to know about the Lowcountry, whether it's Savannah, Georgia, Bluffton, Hilton Head, South Carolina, or their surrounding areas? Well then subscribe below and tap the bell for notifications so you can be the first to know about our current market. We get calls, texts, and emails every day from people just like you looking to make their move to the Savannah, Bluffton, Hilton Head areas, and we absolutely love serving y'all. So whether you're looking to move in the next week, the next month, or the next year, give us a call, shoot us a text, send us an email, or book a Zoom call, all in the description below, so we can help you make the smooth transition to your coastal lowcountry living. Hey, let's get started. It's hard to believe that only a few years ago, the real estate market was nuts, where buyers would submit offers thousands of dollars over asking price and still not get their offer accepted. Sellers could put their homes on the market and have it under contract within hours, regardless of the condition of the home. Well, a lot has changed since then. Several months ago, we posted a video called Who Killed the Market? At that time, we recognized a distinct slowdown in the market here and said we were moving towards a more balanced market. At that time, interest rates were high, but inventory was beginning to creep up thanks in part to new construction, which continued to chug along. High prices and interest rates coupled with economic uncertainty had both buyers and sellers sitting on the sidelines. Additionally, 2024 had the uncertainty of a presidential election. Once the election was over, we hoped that 2025 would provide more economic stability, rates would moderate, home prices level out or decline, and sellers and buyers would re-enter the market. One thing we didn't expect to start the new year was a new trade war and the extensive tariffs assessed by the current administration. This has infused another level of caution and uncertainty into the economy, and once again the American consumer is cautious. As we've seen, the real estate sector is particularly sensitive to interest rate changes, and the tariffs impact these rates both directly and indirectly. Just a few examples. There's cost of construction. Tariffs on raw materials such as steel, lumber, and appliances can significantly raise the cost of construction. Developers may delay or cancel projects, reducing the supply of new housing or commercial space and potentially increasing prices due to scarcity. Then there's investor sentiment. Tariffs create uncertainty in global markets, which can make investors wary. Investors may reduce exposure if economic or policy risks rise. Moreover, higher borrowing costs reduce the appeal of real estate compared to other classes. And then there's housing affordability. Economic uncertainty impacts bond yields and, as a result, interest rates. As mortgage rates rise due to higher interest rates, monthly housing payments increase, making home ownership less affordable. This can reduce demand, especially among first-time home buyers, leading to a cooling in home price growth. As a result, across the country, there is still significant economic uncertainty in the first quarter of 2025 as we try to figure out whether we're headed towards a recession, stagflation, or an economic boom. Fortunately, the economy in the Lowcountry had some momentum from economic growth to help moderate a possible downturn. Hopefully, once the trade war is resolved and the tariffs are renegotiated, the uncertainty in the market will dissipate and the real estate market will return to what we expected. In the meantime, let's take a look at where we stand today. A lot of the data points resemble what the market looked like before COVID, when we were in a more balanced market and buyers and sellers were on somewhat equal footing. This is true with almost everything, with the exception of the average sales price of a home, which, as you're painfully aware, has significantly increased since then. But even that is showing signs of moderation, as you will see. Also, the average interest rate on a 30-year mortgage in 2018 was 4.7% and 4.13% in 2019. Today, these rates remain in the high 6s. But again, if economic uncertainty dissipates, hopefully the rates will also decline. Hopefully you'll stay with me as we geek out over some of the numbers here in the market. Starting in Savannah, the average sales price rose 68.63% from January 2020, when it was $254,000, to almost $428,000 in March of 2025. However, the current March average sales price is down 5% from the high of $451,000 just 2 months ago in January. Then there's homes for sale. Today there are currently almost 3,000 homes on the market. This compares closely to the 3,000 homes for sale in January 2020. This is almost 3 times as many homes for sale as January 2022, when there were a low of 1,103 homes. So with more homes on the market, it stands to reason that there are more months of supply. In January 2020, there was a supply of 4.2 months worth of homes on the market. Today that stands at 4 months. That compares with a stunning low of 1.1 months of supply in January 2022. Historically, 6 months of supply is considered a balanced market. While Savannah is not quite there yet, it is considerably closer now than it was a few years ago. Then there's the number of closed homes. Number of closed homes in January 2025 stands at 702, which is up almost 24% from the 568 in January 2020. However, compared to June of 2021, that number is down from that high of 1,226 homes closed. Also, the average days on market is currently at 75 days. In January 2020, that number stood at 95 days on market. But just for context, in June of 2022, days on market was as low as 30 days. As you can see, a lot of these metrics show the Savannah market is returning to what it was like prior to the hazy, crazy days of COVID. And home prices are finally beginning to level off. Hey, before we move on to looking at the market in South Carolina, we just want to say thank you for watching. And if you like our videos and find them helpful, we'd love for you to like and subscribe to our channel and hit the bell to be notified when future videos drop. Okay, so let's turn to our neighbors to the north, beginning in Bluffton. The average sales price from February of 2020 to March of 2025, Bluffton said, "Hold my sweet tea," and doubled its prices. The average sales price went from $429,000 in 2020 to $930,000 in March of 2025. That's up 117%. From a sleepy suburb to a real estate heavyweight, Bluffton is giving Hilton Head a run for its waterfront money. Prices have moderated slightly since peaking at just over $1 million in October 2024. And looking at the number of homes for sale, during the same period, homes for sale held steady, dipping from 570 in 2020 to 560 in March 2025. That is a little over 5 times their low of 106 homes for sale just 3 years ago in January 2022. Similar to Savannah, March's inventory of homes increased from 4.3 months, up from 3.5 months in 2020. And that is significantly higher from the low of half a month of supply in January 2022. This reflects a more balanced, less panic-driven market. Number of closed homes has increased 8.13% from 123 in February 2020 to 133 in March of 2025. A modest rise, but steady. And average days on market is comparable to 2020, with 70 days on the market versus 64 days on the market today. June of 2022 saw listings just last 12 days. So now let's take a look at the Hilton Head market. If you bought a home here in 2020, congratulations, you are now living inside a small fortune. While not as hot as Bluffton, Hilton Head prices are up almost 97% since 2020, from $823,000 in February of 2020 up to $1.621 million in March of 2025. The average sales price peaked in January of 2025 with a high of $1.76 million. Then you will look at homes for sale, which is down considerably, a whopping 45% from 481 homes for sale in January 2020 to 265 homes today. As we look at the average months of supply here on Hilton Head, that supply has been cut nearly in half, from 6.5 months in 2020 down to 3.9 months. That compares to a record low of 0.8 months in early 2022. So as you can see, it's probably easier to find a parking spot at Caligny Beach during spring break. Looking at closed homes, it's up almost 200%. From 29 closed homes in February 2020 to 85 closed homes in March of 2025. That's not a typo. That's nearly a tripling of closed sales. And if we look at the average days on market, that is down from 197 days in 2020 to just 41 days in March of 2025. This dramatic drop means that properties are practically selling in the time it takes to finish a round of golf. March of 2022 saw homes vanish after just 17 days on the market. You've probably had pizzas that have lasted longer than that. So what does all this mean? What do all these numbers point to? As you can tell, numbers don't lie. The market is definitely showing a lot less froth and returning to a more balanced one where buyers and sellers are almost on equal footing. So if you're looking to buy a new home in the Lowcountry, you can take a little more time and find the home of your dreams. You also have more leverage to negotiate than you've had in several years. If you're selling your home, you have the benefit of higher prices over the last several years, but it may sit on the market a little longer than your neighbor's house did just a couple of years ago. You also may have to give up a little of your profit to pay for closing costs or other buyer concessions. Generally, there is about a 4-month supply of inventory on the ground in the Lowcountry, and the number of homes for sale is creating competition and choice. Home prices are still high but moderating. If we can just minimize the market uncertainty, interest rates should cooperate and go down, and the housing market should be in great shape for both buyers and sellers. So if you're dreaming of a Lowcountry move, remember, you'll need more than charm and a Pinterest board of porch inspiration. You'll still need your lender's pre-approval, a laser-sharp agent, and maybe a backup plan. Until then, whether you're shopping, selling, or just Zillow surfing during lunch breaks, remember, in any market, fortune favors the informed and financially prepared. So stay up to date on the latest of what's going on in the Georgia, South Carolina coastal Lowcountry, and please be sure to like, subscribe, and tap the bell for notifications so you'll be the first to know about the current market here. And if the Lowcountry looks like a place you would like to call home, give us a call, shoot us a text, send us an email, or book a Zoom call, all in the descriptions below. Again, this is Keith and Donna Hellman, hosts of the Coastal Lowcountry Real Estate Channel and Local Realtors. And as always, it's been an absolute pleasure spending time with you again today.